Gang. I'm a little bit early, but I just wanted to hop on, get this started. I need to get some stuff together really quickly before we go. I had to run downstairs and congratulate my mom. So give me 1 second, but I just wanted to open this up and we will start in just a few minutes. We're a few minutes early at the moment. All right, BRBs. Apologies. I'm about to ping another time for we are live. We are live. Mastermind 5. I know there's been a whole lot of pings recently, a lot of ping. Discord pings. I know I ping a lot. It's something I'm trying to work on. Okay, I want to X that. I'm going to make this bigger. All righty. And can someone just confirm for me in the chat that we can see the Google Slides? Perfect. Thank you, gang. Oh, welcome, fam. Welcome. Lesson 5. It's going to be a few minutes before we actually dive into any of the material. I want to make sure that we allow for people to fully trickle in. I also got to plug in my computer with some power. But I am excited. And when I said tonight is like Christmas in the M5 updates channel, I really meant it, because as soon as we are done with tonight's lesson, you all are going to be receiving 5 videos. You're going to be receiving 5 videos. You're going to be receiving this exact lesson from Masterminds 2 through 4. 1, I don't think we did. I think 2 and 3 through 4 were far better than the first one. You're going to be receiving this exact lesson, but with different examples from lessons, classes 2, 3, and 4. So you're going to be able to see this exact lesson, which is a confusing one. Not confusing, but I just want to say multi-time frame analysis is the one that I truly believe is like, it's an ongoing learning process, right? Like with the levels and the buy and sell setups, it's a little less subjective. That's really concrete, right? It's really for sure, here are the rules for the levels. It's systemic, right? Multi-time frame analysis is more a concept that I think it's going to take some time for you all to understand. And I think that you can never have enough examples or learning of it. So all classes are going to get access to this lesson tonight. All of you are going to get access to all former classes, lessons on multi-time frame analysis. And then in addition to the lessons on multi-time frame analysis, you are also going to get 2 other bonus videos that I did for earlier mastermind classes. One of them is going to be a individual bar by bar breakdown, and we'll do something similar like this towards the end of our class as well. But sorry, my phone blowing up. I just need to make sure no one's dying. You will get a bonus on an individual bar breakdown, which means that what we did was essentially go through a 5-minute chart and break down every single candle that occurs on that 5-minute chart using all of the information that I taught you all in the past few lessons, right? So you're going to get the individual bar breakdown. You're going to get 3 multi-time frame analysis lessons. And then you're also going to get a live trade review where I took a meta trade and gave a meta signal, and I screen recorded and recorded myself doing it. And I managed it and I walked through what I was looking at, what I was looking at here, what I was looking at there. So I'll make sure to make another one of those in the near future, but you're going to get all that tonight. So 5 videos, as soon as we're done with this, are going to be sent to you in the mastermind M5 recordings area. I'll label them all nice and tidy, right? But I would legitimately encourage you to rewatch every single one of them, right? I would encourage you to rewatch every single one. I would encourage you to go through each, especially the chart portions of each, right? The other if you skip through the slides, that's not the end of the world to me, right? Like I get it. You don't want to go through the slide, but again, maybe you watch those on 2x speed or something. But the charts, I want you all to like go through that part really in depth and rewatch all of them. This is a concept that it's gonna, like I said, it's gonna take a little bit of time to click, right? This is multi-time frame analysis is not as cut and dry of a system as the levels or the buy and sell setups are, where there's clear like definitions. Multi-time frame analysis is conceptual, right? So Christmas night today, you're going to get 5 videos as soon as we're done. Then as soon as this recording is done, processed, I'll post that. Again, everything will be very clearly labeled. So that's housekeeping item number 1. Housekeeping item number 2. Any of you, which I believe there was a decent chunk, probably like 20 or 25 of you who were already members prior to joining the mastermind, and we've handled this with a few of you, but not everybody. If you were a member prior to joining the mastermind, of course, your month payment for the room is going to get refunded because it's included with the mastermind. So we've handled this with a few people already. What I want you to do is after this lesson's done, or tomorrow or something, just make a support ticket and just let us know your email address and we'll process it all on our end. And if you want to stick on with us, we'll also get you updated to the mastermind discount price, which for those, I know it's going to pop up in the questions thing. We're supposed to talk about it all at the end, but the mastermind discount price is $135, and that offer is good for you all for life. So unlike other like sales or anything like that, I don't ever want you all to feel like pressured to be like, oh, I want to join the Discord or stay along for all that. Again, this is 3 weeks to a month out, right? Again, but if you choose to, whether it's now, 6 months from now, or a year from now, that price will be available to you. So if you cancel, you can come back at that price. Like it's not going to change. I don't want anyone to ever feel like that price is actually impacting your decision making on whether you stay or not, or whether you choose to go trade on your own, which is really the goal of this. So we'll handle all that as we get towards the end. Like I said in the beginning, I know that this week and last week with the holiday week was a little bit slow on like pre-market webinars and all that. So we're going to extend the length of the mastermind an extra week afterwards, where we won't have any formal classes, but everyone will still have full access to everything. We'll do more pre-market webinars. We'll do some wrap-up stuff again, like 3 weeks from now. So we are going to extend it just to make up, because I know this last week was slow, and since I've been at my parents' house, I've been less on pre-market webinars, stuff like that. So we're for sure going to make sure that you guys and gals get every single thing you desired from it. So that being said, that was all just some housekeeping stuff. Hopefully that is all clear to everybody. Any questions on that? Don't hesitate to reach out and let us know. We're here. That's what we're here for. But again, don't worry about it too much. We'll talk about it more towards the end, and it's not an immediate concern. But if you were a member, just go ahead and make a support ticket and we'll get you handled. All right. That being said, now that we've done the housekeeping, now that you know that after this lesson is done, you are getting 5 videos to watch, and I expect some of you might stay up all night watching them. Don't do that though, but I suspect some of you by the end of tomorrow will have watched all of them, and I'm excited for that. Let's get through this lesson so that you all can get on everything, right? So as I mentioned, I will give a little bit of a warning. I've been feeling sick recently, and it's peaked out today. I hope it's peaked, although I don't know how tomorrow will feel. So if I'm a little bit lower energy, which I don't feel that way yet, or if I'm a little bit slow, or a little bit of that, just bear with me. But you know me, I'm going to power through and knock this the hell out in the best way possible. And like I said, this is a lesson that I think that is going to take you all rewatches, and it's going to take you multiple various different examples to fully understand everything. So that being said, as I mentioned in the very beginning, once we started lesson 3 and talking about our technical system, I am going to sear this stuff into your brain, right? So this is now the 3rd time that we are talking about technical analysis as a triangle offense system. And it's imperative that by now we are all very clear on the idea that we approach the market far differently than most traders do. Most traders approach the market in a predictive manner. They like to force a pattern or a EMA cost or some sort of indicator action on the charts and force some sort of move on there rather than reacting to what the market is giving them. We as users of the triangle offense react rather than predict, right? So we are here and trying to see what the market gives us and find edges within what is being presented to us. And the best part about this is the triangle system offense has a defensive system built in. For me, that defensive system has been on show, on highlight, like getting some screen time these past 2 days, because I personally haven't loved the action of the past few days. I've been in hit and run mode. I've been taking what I can get from a trade perspective, which hasn't been much. It hasn't been much at all. I think my P&L is probably like plus $1,000 or something on the week. Like it's not great, right? Like it's just, we've had some winning trades that I got some profit of. We've got some losing trades. I had the MCD swing, but it's really just been defensive. Right? I went from 2 weeks ago making 80 grand plus in a week to this week in 2 days being extremely flat between the 2 days, right? I'm happy about that because in earlier stages of my trading career, I would have blown ports by now, right? I would have gone on a tilt and given back part of that money rather than being okay with the fact that, hey, I don't love these charts. It's time to go into defense mode. And that's what we've done over the past few days. It's been very low activity. Now, I did put some risk on overnight tonight on Etsy. So my flat week will likely come to an end in one way, shape, or form to tomorrow, depending on how Etsy goes. But that being said, I think it's really important to remember and understand this concept of a defensive system built in, right? We'll talk more about that. But this is when all of our rules aren't aligning, when our 4 things that we want to align before entering a trade, which we cover tonight, if those 4 things aren't there, we are in defense mode and we are patient and we are not aggressive in our opportunities. And that is a powerful, powerful, powerful skill, my friends. Like very, very powerful. Now, we as technical traders and following this triangle offense of being reactive, because our rules aren't looking for EMA crosses or MACD crosses or bull flag breakouts or anything like that, we need to have a more advanced structure and set of rules that we follow. Now, we've covered this twice already by now, but again, I need these to be seared into your head to the point where you are watching charts, much like the way when you are shooting a basketball or when you're knitting or when you're doing literally any hobby or activity, you form muscle memory. I need this to be muscle memory in your brain, right? 1, markets are always either trending or ranging. Uptrend, downtrend, consolidating. No in between. It's always one of those 3. Second is oh my goodness, it didn't do it on this one too. Remember we did this last time where this one wasn't copy and pasted to the right? Every time, man, every time. Second, the break of a previous candle high or low should get continuation in either direction. Now, we're going to expand on this topic a little bit tonight with this concept of failures, right? Because we talk about failures a lot. We talk about failure to go lower, failure to go higher. We talk about failed buys, failed sells. But at its core, while those are potential entry patterns, we also have to understand that from a conceptual, larger, broader perspective, right? Anytime a previous candle breaks a high or low, we should get continuation in either direction. Now, that doesn't mean it has to. It can be a pause bar. It can be a rest bar. It can be the start of a pullback that ends up continuing. But if it doesn't get continuation, we take that information as a clue, right? So I know there's a little bit of confusion on failures, and we're going to dive into that tonight a little bit to make sure that everybody is caught up to speed. But again, this is something that it's one of the common pieces of feedback that I've had is, and I can think of 5 people off the top of my head, Kaylin, Caro, like just literally who didn't understand failures in the beginning. They was wrapping them in. And then one day, literally they messaged me and I have a screenshot from Kaylin, man. And he's like, dude, failures just clicked in my head and it makes so much sense. Right. So like, this is something that if it's not the easiest thing to understand right off the bat, don't trip. It's going to take a little bit of time. Right. So, that being said, we're going to dive into those more tonight. Now, our next rule is that candle analysis is applicable on all time frames. Does not matter. 2-minute chart, 5-minute chart, daily chart. It is applicable. Why do I emphasize that one a little bit more extra tonight than I have in previous nights? Because Tonight, we're going to be talking about those various time frames. All right. We're going to be talking about how to tie them together in a way that I don't think you've ever been taught. And I think this is going to be very important to understand that the candles, the way that we are looking at it from candles or patterns or buys and sells or triggers, failures on a daily chart, those are just as meaningful as on a 5-minute chart, right? And if that's the case, right, then we can look and learn from what we've seen on smaller time frames by staring at them all our lives, apply it to longer time frames and capture bigger moves, the big moves, which is what my specialty is, right? Just to kind of go on a little bit of a side tangent, because I know that truthfully I think you all enjoy my rants, but as long as they're coordinated to the topic at hand, which they always are. But a little side note, right? Like, you all know me. I prefer to trade calls. There's no hiding that. This year has been a little bit trickier than most others. I think if we were in a bull market, I would probably be up an ungodly amount of cash, just the way that I've increased my position sizing. But I prefer to trade calls, right? Like, that's part of what my system is, right? And part of what I prefer. Everything still works on shorts. My brain is trained a little bit better on calls. Doesn't mean yours has to be, but this is just for me, right? Sorry, I totally just lost my train of thought there for a second. I prefer to trade calls. Big moves. Yes. So in the last 2 days, right? And not only do I prefer to trade calls, the second portion of what I like to do is I like to capture large moves. I like to capture large moves, not necessarily scalps. I will scalp. I'll hit and run here. I'll hit and run there. It's usually smaller size, but the vast majority of my trades, and I hope that this has been kind of shown to you over the last few weeks, especially with some of the bigger weeks that I have, is I like the big R to R ones, right? I like to capture a full move. I'm not looking to scalp from 210 to 212. I want to move from 212 to 219, right? To 220. I'm thinking of low specifically on there, right? Thinking about Etsy a couple of weeks back when we had it at like 95 to 1084 or something like that, right? I like to capture the large moves, and I'm good at holding for those large moves and buying those pullbacks, right? So that to me is where my sort of defensive system comes into play more than anything, right? Is that, sorry, I keep losing my train of thought for some reason, because this may be mainly because I took a side note and a tangent. Sometimes this is what happens. But gosh, yes, for me. Okay, now I know where this is all. I'm sorry, guys. My brain's a little fried, like I mentioned. Let me tie this all back together. This started by talking about candle analysis is all applicable on all different time frames, right? The style in which I like to trade is to capture bigger moves. I like to capture these larger ones. I'm not super interested in scalps. I'll do them when I need to, but they're not my favorite types of moves. So this ties back to our defensive system being built in. The last 2 days, there haven't been giant moves that I had planned for. There was a giant move on Monday to the downside. I just wasn't planned for it. And we're going to do a really deep dive on that particular chart later tonight, right? But I just wanted to sort of bring that parallel into is that one of the skills that I had as a trader, right, was being able to apply this short-term trades, these smaller time frame charts, and this candle skills I had learned on those to the larger time frames to capture larger moves, daily chart breakouts, as opposed to 5-minute breakouts, right? And for me, that ties back into where our defensive system is built in, is that when we don't have those types of opportunities presenting themselves, I'm more hands-off, right? And in the opportunities I was prepared for and trying to trade this week, I didn't see anything that had the big move opportunity. Thus, I remained more hands-off. And again, I will openly admit, I had a big SPY miss on Monday to the downside where there was absolutely a potential move to be caught for a large gain. And we're going to break that trade down in that on multiple time frames tonight. So, okay, sorry. I got a little off track there, and then I lost my train of thought, and my brain's a little bit tired, and I'm a little bit sick. So I apologize for that lapses, because I paused like 2 or 3 times there. Let's get back to it. The last of our rules that we abide by, again, and we're drilling these into your brain, is that markets move from level to level. And the point of this from the last lesson was to highlight to you all that they move from like the actual level that we have to the next level. Like those levels are so accurate that that's the way they move. But tonight, what I want you to take away from this more than anything is that markets move with a purpose, right? They move with a purpose. In the multiple timeframes are how we are able to identify that purpose, right? All right, review, seared into brains. We're gonna do a little bit more review because it's been a week since we've had a lesson. So I want to get everybody refreshed up. We'll move through this stuff quickly and get on to failures and then multiple time frames, right? So first, reviewing the 3 pillars of our strategy. Candle analysis. This is finding a buy or a sell setup or a failure pattern when we're looking for an entry. We can also use this on longer time frames, like I just mentioned, to find opportunities within the chart. Then we do trend analysis, which we covered in lesson 3 with a very deep dive on various charts, mostly Moderna, giving a thick breakdown on trend and how we look and identify higher highs, higher lows, lower highs, lower lows. So little note on this one. There are a variety of you, and I am blanking on how to say some of your Discord names right now, but there are a variety of you who have taken it upon yourself to start marking out a ton of stuff on charts, going through 5 and 15-minute charts and marking out the failures, the patterns that work, the buy sells that worked, the ones that failed, the higher lows, the trends, and they are posting them in questions chat. In the last few days, I've been on it. Like I have been on that motherfucking questions channel, mainly because I've been sick and in bed, but like I've been on it. So I would, and it's a handful of you, right? And I'm probably shooting myself in the foot because I'm traveling tomorrow, but I'm going to be on it again for the next 2 weeks. I'm on it. So post do what you see, scroll through those channels, see what you see. I want to give somebody a shout out, and there's multiple people to give shout outs to here, but one, I have to give a shout out. I know who you are, but I just don't know how to pronounce your Discord username. It's like the SV. Who are you, SV? I need to give you a shout out because I also want you guys to know what to look for. SVKO Trades. SVKO Trades. I knew it was your name. SVKO Trades. Scroll through the questions channel and take a look at the questions channel and the mastermind chat. Search for what he's talking and take a look at some of the stuff that he has posted with the stuff with the charts and all that. I encourage you all. There's a variety of other viewers who have done it as well, but I encourage you all to go through and mark up the charts the same way he has, because that was part of the homework in lesson 3. Some of you really started off hot doing that, but if you want to take full advantage of this mastermind, that's part of it. That's the part of it that's on you to like put in this work. And we have been responding to these. Like these are not going unanswered. And if they are, it's truly just a miss, because I want you all can literally see by going to the Discord how many questions we've been answered today. We've been on top of it, right? So don't skip the homework. Do the homework, right? And we'll have some for sure. Right. So moving back to that, sorry, another little sidebar, but that one's really valuable. SVKO Trades, you got to get a shout out from me and a few others because, and Grant H as well. Just there's many of you, but those were the first 2 that popped up because I responded to them today. But I encourage you all to do that homework because we are responding, right? Like I'm here. This is my full-time job with you all right now. So now trend analysis also includes multi-time frame analysis. We'll talk about tonight. The 3rd pillar of our strategy is levels, which are derived from the hourly chart. More details were on the previous lesson. All right. Now, again, we'll drill these in your brain. We have 3 support and resistance rules that we are going to apply, right? And that we understand about how support and resistance or levels work. First is the knock-knock rule. The more times that a level is tested, the more likely it breaks and breaks with power. Second is the Uno reverse. Once a resistance is broken, that resistance should act as support when retested, or vice versa, with support being retested, it should act as resistance. Should is highlighted there because we as a group understand the commonness of failure patterns and how those play a role in the market. And then hit the body. When we draw our levels, we are focused on the bodies, not the wicks. We are more focused on the bodies. Right now, the next portion of that we covered in L3 was buy and sell setups. Right, I'm hopeful that this is clear to everybody by now. We've had a ton of time in between our first lesson on this. Bunch of people have been posting stuff in the chat. Like I said, I encourage you all to continue doing more. But this is the system that we use for entries, right? And this is also the system that we kind of use for trend identification, because the market moves with buy and sell setups, right? So failed buys or successful buys or failed sells or successful sell setups are pivots that establish the trends that we did analyze and that we're going to analyze more tonight. Right. So definition of a sell setup is during a downtrend, we wait for a rally to establish resistance and then a bar to take out the previous bar's low, triggering us short into that trade with a stop above the wick of our signal bar, right? Easy enough. Now, again, just a different example here. We have a doji here, which acts as our signal bar. We have the entry right there. We have our stop above right there, right? Signal bar for sell setups, entry is below the signal bar low, stop above signal bar high. These are ways of finding with trend trades and with trend entries. Buy setup, same things in reverse, right? During an uptrend, we wait for a pullback to establish a support level in a bar to take out a previous bar's high, right? The signal bar is the bar that forms, that signals to us that we are entering a trade. The entry bar is the bar that we use to actually enter. That would be the green bar here in this example. I'm very hopeful that by now, everybody at least conceptually understands these. Like I said, it's going to take you years of seeing these in real time to master them. I don't even think I've fully mastered them yet. I learn something new every day when I'm watching buy and sell setups. But from a conceptual standpoint, everybody should be at the same page now where we get it. We get it, right? Like we understand how it goes. Now, here's where we're going to spend a little bit of time talking about failure patterns before we get into multi-time frame analysis, because I want to just sear this in a little bit, right? Now, here, let's define a failure to go higher, right? A failure to go higher is something that has reason and attempts to go higher, yet fails, right? Failure setups can often provide strong moves in the other direction, right? So the first example of our failure to go higher here is right there, right? Let me and pause the annotate tool. It's right there. Why? Because if we know and we follow our rules, right, that a break of a previous candle high should get continuation in that direction, then when we break the previous green bar's high and we put in a red bar and the next bar takes out its low, we have then failed to go higher. This is a conceptual aspect of it. This is one of the broad points that I was talking about where we failed to go higher. Should you enter a trade with a stop below there, or excuse me, a stop above there and a trigger below there? I don't know. That's really aggressive in my opinion. You could, but it would be rather aggressive, and it's definitely not with trend in any way, shape, or form, right? Because this is a strong up move, right? We have a strong up move here. So shorting here would not be, or excuse me, would be counter trend. It would not be with trend. Excuse me. Hold on, let me get that. Let me mute. Oh, they muted themselves. Perfect. Perfect. Okay, now let me exit that. Right, we would not necessarily, I wouldn't want anyone to short your, unless, even if there's a level, but it would be an aggressive short, right? It'd be aggressive short with less confirmation because it's a strong move up, and we have to assume that this is going to pull back and establish a higher low like it did right here, and then potentially trigger a buy setup, right? Which is what happens. Let me get this clear and then pop annotate. Which is what happens. Why is that? Oh, there we go. Which is what happens right here, right? Right here, you can see that we have a buy triggering right there, right? We have an uptrend. Definition of a buy is an uptrend. It pulls back, establishes support in a bar that breaks the previous bar's high. That triggers a buy setup, right? So now it's important to understand, annotate. It's important to understand that right here, is kind of where these two concepts will clash, right? When we get this break right here beneath the previous bar's low, that's our first sign that from a conceptual broad understanding point, we are failing to go higher, right? Because we broke a previous candle's high. It was green. We should continue higher based off everything we know, right? So when we break below that low right there, right? The buy setup people who took that long aren't necessarily stopped out yet, but that when what should happen doesn't, we take that as a clue, right? And on this particular example, right, this failed buy setup actually could have been a short in the other direction, right? Why? Because by being a failed buy setup, naturally, by failing the buy setup, that means that we are also putting in a potential lower high right here, right? Now that potential lower high gets confirmed underneath this low, basically where longs would have stopped out, right? Because we failed to hold that previous higher low, thus putting us in a new low, right? Showing signs that the buy is failing. So this has both the concept of failing to go higher and then actually triggers a failed buy setup and a PLH that turns into, right? Turns into a confirmed lower high, right? And here would be a possible short entry on this trade. Now, it would be aggressive, but let's say, friends, let's say this, just for shits and gigs, let's say you have a level right here, right? Now, could you take this short, actually, let me do something real quick. Let's say you have a level right here and we rally perfect into that level. But guess what? The rally was a strong uptrend, right? It was a strong uptrend and powerful move into that level. So from what we know about price action and structure and everything, there's valid reason to believe that this level, while it failed the first time, we might knock and come and retest it, right? Just because, like we learned in the reaction stage, sorry, I wasn't looking at the camera, like we learned in the reaction stages of the levels lesson, no reactions are going to look the same. Just because we failed it on one first tap and got a 2-bar pullback doesn't mean we are firmly rejecting it, right? So as we mentioned just a minute ago, you could potentially take a short with a stop above this candle's high and an entry below that candle's low. But let's go interactive and pop out the chat box. Is that ideal for me, right? Like, is that ideal? Number one, ideal entry. Is that like A+? Remember, and let me break this rule down first for you. Remember, we want to trade with trend at all times, right? Or most of the time. No, that's not ideal. Even though it's rejecting the level, my friends, even though it's rejecting the level because of trend, it's not ideal, right? But okay, let's start to take this information as a clue. Like we do, we react to what the market is giving us. We react and watch how levels are reacting, right? So let's see how this level reacts. Let's say that you decide, Jake, for whatever reason, for the longer time frames, for I don't think we're going to sell off because of a catalyst or sorry, let me mute. And then when I mute, I'm going to do the thing where people can't unmute themselves. Diablo Trades, you accidentally came unmuted. It's okay, brother. Diablo, I love you, sir. You're a homie. Okay. Right? So now let's say that for whatever reason you're bullish, right? You're bullish and you decide, hey, I think we're going to break the level on the next attempt. Jake, we trigger a buy setup right here. Even though we're below the level, can I take this buy setup with hopes or anticipations of this level breaking? What do you all think? What do you think the answer is? You're good, Diablo. I was just totally fucking with you. Would you guys be okay, right, Because, hey, would you be okay taking a buy setup here? Again, knowing we had a level right there. Sorry for those horrific drawings, but right? Yep. Stop under the wick. It's with trend, right? Is the R to R good? Well, let's see. Without doing the full R to R calculation tool, right? We can see this is a pretty small candle. I'd be willing to bet you have at least 1-to-1 getting up to your trim target at the previous high. But if you're taking it with an assumption of the level breaking, the R to R is definitely going to be good enough because you're going to aim for the next level. I'm down. I'm okay with that, right? I'm perfectly fine with that particular thing. Now, one of the things that we haven't talked about, but we will, is that the only thing that would impact this is if that this is a smaller time frame. That was awful. But if this is a 5-minute chart, the big thing that we have to consider is what is the longer time frames telling us, right? Because on a 5-minute basis alone, my friends, every single one of you just said, yes, valid long to take there. And I 1,000% agree with you. With this information in a vacuum, absolutely. Absolutely, absolutely. You take that buy setup 100 out of 100 times. Strong move up from the open, first pullback, buy setup right below the level, boom. If the longer time frames were bullish, this could potentially be an A+ entry, right? Especially if a break of this level we think sends us $10 higher and you have a 45-cent stop. Yeah, that could potentially be an A+ entry if the longer time frames agree with you, right? Now, let's say that the longer time frames didn't agree with you. Let's say that this was a 5-minute uptrend, but the longer time frames were actually presenting a bearish trend. Like, let's just, for example, say that the hourly chart had like gapped under a level, right? And it had gapped under a level, right? And we're looking, for maybe a retest of that level before potentially going short, right? So this is a 5-minute chart that gets an uptrend and pushes up there, but maybe the hourly chart is still in a downtrend, right? In that example, are we taking this buy setup? If the hourly chart's in a downtrend, and let's just say like the daily chart had given us some sort of clue that the market might not, like the market might be moving down that day, right? So that we're in an hourly downtrend and the market's given us a daily chart clue that we might be headed down that day. Do we want to long that first buy setup right there? Do we want to long that? Probably not, right? Probably not. Would I kill you if you did it? No, I wouldn't, because again, your risk is tight. You take this buy setup, you're not taking a big stop unless you use 0 DTE and they deteriorate fast, but you're not taking a huge loss on this buy setup no matter what, right? Just based off the size of the candle. So I don't kill you if you do that. I'm not mad at you if you do that, but would I take that buy setup? No. No. And you all agreed, right? You all agreed that the longer time frames said no, right? We had that hourly had maybe being a downtrend. The daily was maybe giving us a clue of a no. So we say no, right? We skip that buy setup. But what's another way that you could potentially take a trade, right? Another way that you could potentially take a trade on this is, okay, Jake, same factors that we just talked about. Weak daily chart, or not weak, but a sign on a daily chart that maybe we might start to be reversing down, right? Then hourly chart has just flipped into a downtrend or something along those lines, right? And we have a level right here. Do I want you taking, or would I necessarily think that this is a great trade where you take this buy setup or sell setup right here, right? Short below this low, stop above this high, because you have a level right there, right? Let's say you have the level right there, rally up into level, right? I would still not take this little trigger right there because it's not really a sell setup, right? And it's not that it's not really, it's firmly not a sell setup. It's not a sell setup, right? It is just a pullback within an uptrend, right? And within a 5-minute uptrend, it's just a pullback, right? But based on the longer time frame charts that we just talked about, we decided that we also don't want to take this buy setup right here, right? Now, in order to wait for this to flip into a downtrend and then present a sell setup might take a little bit of a while, right? Because this was a strong 5-minute uptrend, right? In order to wait for a clear, confirmed 5-minute downtrend, we'd have to wait for this candle to move up, fail, then trigger down and move that. But what we talked about a minute ago is that you could potentially take the first failed buy setup. So right here, the buy triggers, we've already talked about the fact that because of the daily and hourly chart, we're going to skip that buy setup, right? And if there are some of you out there right now that's like, God damn, Jake, I can't, I'm not grasping what you're doing right now. I need to see a real-time example. Don't worry. I'll find something that is like, at least, you know, in the same ballpark as this for a real-time example in just a few minutes, right? But here we've decided that we're going to skip the buy setup. One entry you could take is right there on the first PLH. Now, is this a confirmed sell setup, my friends? Is that a sell setup right here? Is this a sell setup? Yay or nay? Right here, this trigger and break below right there. Is that a sell setup? No. Some yeses, some no's. Some yeses, some no's. No, it's not a sell setup because technically speaking, we're still in an uptrend, right? That's a potential higher low, but it hasn't broken here. So it's not a potential sell setup. It's not a sell setup. But what it is it's a failed buy setup in that potential lower high, and you could take a short here with a stop back above there, meaning that you would take this short essentially with the thesis of shorting the first potential lower high and that buy setup was going to fail, right? Now, if you're taking this on this 5-minute chart in the daily, if you're looking to take this entry right here at this circle on a chart where there's a strong daily chart, the weekly's in an uptrend, the hourly's in an uptrend, I'm not taking this short. I'm not taking that. But what we had just discussed is that we were looking at a chart that hypothetically had just first given us a clue on the daily that we were going to reverse down. And then we also on the hourly had like just flipped to a downtrend or something like that, right? That situation, this is an excellent, excellent, excellent entry for a short position, right? For a short off that failed buy. So that would be an example of a failed buy setup that you could use as a trade. Again, failures are going to take us a minute, but is the concept of failures a bit more clear now, right? Understanding that there was technically a failure to go higher here, but that's not the real first entry. Even with the level there, the real first entry would be the failed buy setups. I know it's not going to click like butter or smooth like butter, but do failures make a little bit more sense right now than they did coming into tonight? Just a few yeses would make me feel great. Sweet, sweet, sweet. Okay. Boom, boom, boom. Awesome, awesome, awesome. Okay. Now, that being said, right, that's not even the main topic of tonight's lesson, but I think it was really important that we did that. And somehow the participants has dropped a little bit. Oh my goodness. I really hope it didn't. I hope that didn't deter people away. I thought that was really good. That being said, it was really important that we covered that tonight because like I said, I think once we flip to the charts, I haven't found an example yet, but I think I'm going to try and find one that's at least in the same ballpark as this. So we can, break it down a little similar, right? So that being said, let's now cover a few more things before we dive into the charts, right? First was a level review, and I'm actually going to skip the level review for now because failure stuff that we just talked about was a little bit new. The level stuff is just the exact stuff from the last lesson. So I want to continue on with a little bit of the new stuff, right? So then we talked about failures. Now let's dive into multi-time frame analysis and what it is, all right? And how we're going to talk about it tonight. So I originally had a few different analogies for this. I had used, Eric had a great analogy about an airplane thing. I had a weird but functional analogy about a house plan. It was functional, Ron. Don't tell me it's not functional, Ron G. It worked. However, Ron G came up with a much better analogy that we are going to use. It worked, Ron. it worked. But Ron, yeah, the road trip is much better. And we're going to use this road trip analogy tonight to sort of break down how we use multi-time frame analysis. Because here's the thing, folks, much like all the stuff that I believe other gurus, furus, great mentors, bad mentors taught you in the beginning, I think they didn't teach it to you the right way. Many of you who have taken previous courses, and I'm just going to ask this one time, because not all of you might have been this way. So this is not one that's an obvious answer, but how many of you have learned top-down analysis? Top-down analysis. We go from top down, right? We look at the daily, then we look at the 4 hour, then we look at that, right? Some yeah, some nah, some yeah, some nah, right? To those who not, no worries, right? To those who yeah, exactly, right? So this is why I asked. There's a good mix, right? The top-down approach. Basically what those people will teach you, and they're not wrong to teach you this, but I think they don't explain it in the right way. What the top-down analysis approach is that you start on the daily chart or the weekly, then you move down and analyze the 4 hour, then you move down and analyze the 1 hour, then the 15-minute, then the 5-minute. That's all fine and dandy. Sorry, I'm getting a text from mom. I always have to just make sure with mom that it's not an emergency and no one's dying. Okay. Woo! Sorry, no one's dying, so we're good. Top-down analogies, people teach you, right, from the top down to look into these longer time frames and areas. The problem is that in my opinion, they'll even tell you what it's best to use for. Get your levels off the hourly or your 4 hour or your daily touches, and then use the 5-minute for entries. And they're not wrong on that. The part where they fuck up, and yes, it's a fuck up, is that they don't teach you how time frames intertwine with each other. And this is the key. Time frames are like siblings, right? And I'm going to pause off before the time frames on siblings things, but because that's a different analogy for a couple minutes later, right? But time frames, yeah, you know what? Fuck it. Time frames are like siblings, right? Siblings have a massive impact on each other's lives, right? Siblings will often control the way that another sibling grows up. My older sister definitely played a huge role in my life, in my behaviors, the way my mannerisms, my communication style, you know, like my social abilities, everything. She played a huge role in that, right? And her decisions and things that needed to happen in her life were connected in things that were happening in my life, right? Things that would happen in my life would kind of cause things to happen in her life or vice versa, right? Really, things that happened in her life cause stuff to happen in mine, right? But it's a symbiotic relationship in that sense. Here's where it's usually not a symbiotic relationship with siblings. The older sibling usually wins when you're younger. That's like a standard, right? As a younger sibling, I can speak to it. As older siblings who might be out there, fuck you, pardon my French, but older siblings win. And it's very similar to understanding that in multi-time frame analysis. My sister's the weekly chart, I'm the daily chart. Unfortunately, vast majority of the time, she gonna win. She gonna win. You put a weekly chart up, then next to a daily chart with 2 different trends and 2 different market structures, weekly chart probably gonna win. However, those 2 things have a vast impact. The way the weekly chart moves will cause the daily chart to move a certain way. The way my sister acted as a kid impacted the way I behaved as a kid. These things are connected, and the larger, older sibling usually wins. Rat bastards, right? That's analogy number 1 of why I think that most, different way to teach this than most other people do. Now our road trip analogy, right? Much like the top-down analysis people taught you, we always want to consider the larger picture above all else. They weren't wrong when they taught you that. The weekly chart is our first priority, and when we're looking for swing trades, that's where we use it the most. So what I'm going to go through is how we use each one of these charts mostly, right? Kind of similar to how the top-down people would teach you. Our weekly chart is our first priority when we are looking for potential swing trades or even day trades or even scalps. We focus on the weekly charts, right? Now, the daily chart is our bread and butter for individual bar analysis and trend analysis, right? We love identifying trends on the daily chart, looking for buy setups, looking for individual candles, etc. The hourly is the key to it all. We love the hourly for getting our levels, right? But we also love the hourly for determining trend, right? We love the hourly for determining trend, finding hourly buys and sell setups. The hourly is like, oh my gosh, incredible. The amount of information that you can get off the hourly is and the how much clearer it is than some smaller time frames is amazing, right? So the hourly is very powerful and we use it in a variety of different ways. Then we have the 15-minute, which I call it the 5-minute plus, because I think it's similar to a 5, just with extra plus. You know, it's got plus to it. It's a little bit bigger, kind of on steroids, right? And this is great for intraday buy and sell setups, especially after 8:30 a.m. Pacific time. After the first 2 hours of market open, later in the afternoon, 15-minute buy and sell setups usually provide better entries and opportunities than 5 and 2 minutes, just because 5 and 2 minutes tend to be more choppy, while the 15-minute tends to have cleaner action. Then the 2-minute is what we use for early analysis on entries and exits. All right. All right. All right. It's important to understand that the larger time frames all reign supreme. The people who taught you top-down analysis, or those who just learned it very briefly from me, aren't wrong, right? The larger time frames are always supreme, right? You'll start from larger, then you go small. Here's where they fucked up and they missed up. Here's what they didn't teach you. All these time frames are impactive of each other, right? Let's take a thought process here and a thinking break. A weekly candle on a chart has 5 individual daily candles that comprise that weekly candle, right? So if a weekly chart is in an uptrend, a pullback on that weekly chart, right? If a weekly chart is strong and moving up, let's say, for example, that this was a weekly chart, or actually right here, this was a weekly chart, right? Strong uptrend and a weekly chart. This chart got the pullback, right? This took 1, 2, 3, 4 weekly candles in order to get just the pullback. It didn't shift into a downtrend. Nothing changed about its market structure, but it took 4 weeks to get a pullback. That's 20 daily candles, right? So in the process of that weekly chart getting a pullback, what had to happen to the daily chart? It had to shift into a downtrend, right? And let's actually just look at this exact example really briefly, because I think it would prove powerful knowing what we know. How do I see the full advanced chart? There we go. Yeah, this is going to be a thick lesson tonight. I'm moving at a slow pace. Not slow pace, I'm just ranting a lot, but I know you all love extra time on the lessons anyways. Okay, so now let me reshare screen. Okay, so here is the NVIDIA weekly chart, right? Right here is where we had just talked about that weekly pullback, right? In an uptrend, 4 weeks of weekly pullback. Let's highlight that right here with this box. I'm going to delete this box to clear it up. Delete this box, get rid of any boxes in the area so that it's clear. Now we revert back to the daily chart. Right? And that's where this box is, right? The same box right here, right? Within this box, in order for that weekly chart to get the pullback but not flip trend, the daily actually did flip trend at one point, right? Because the daily had, remember, it was 4 bars of pullback, 4 weeks of pullback, right? 4 weeks. That's 20 daily candles. It's going to be hard for the daily to hold an uptrend for 20 candles straight while the weekly bars are red, right? So here you can see that NVIDIA established a little bit of a failure to go lower, higher, low here, triggered a daily buy, tried to move higher, and then broke beneath this support, thus temporarily flipping the daily into a downtrend, right? So in order in order for this weekly chart to get that pullback right here, which is not a flip of trend, this maintained its uptrend, it was just a pullback, the daily chart actually had to flip trend and pull back into a downtrend, right? Now, this continues on from time frame to time frame. Let's say that the daily chart is in an uptrend and needs a pullback, right? We'll just call it, okay, NVIDIA's chart is kind of messy, but we'll call it right here, right? NVIDIA, strong move up, starts to get a pullback on the daily chart, right? Now, in order for this daily chart to simply get a pullback, even though there's a little hiccup there, I wouldn't have called this a change in market structure. I would still just call this, a healthy pullback, right? In order to get that pullback, the hourly chart would have needed to flip into a downtrend, right? Now, a pullback on the hourly chart would require the 5-minute to shift into a downtrend, right? And this is the same exact way on an uptrend, excuse me, on a downtrend. What I'm going to do actually is this. Copy, paste this side. 222. And now we're going to go downtrend, right? Let's say daily flipping into downtrend, right? A pullback on the hourly would require the 5, 15, or 5-minute charts to go into an uptrend. Now, this can be a little bit confusing for people from one main reason, right? Is the term pullback. You got to understand that pullback means whatever way the trend is going. If the trend is going down, it can still have a pullback. It would just be like a relief rally or a bounce, right? Is another way to call it. But referring to it as a pullback, even though it's going up, is still the terminology that we will use, right? And I'll break that down on a chart in just a second, right? But if the daily chart is flipping into a downtrend, right? Or the hourly chart is flipping into a downtrend, right? A pullback on the hourly would require the 15 minutes or 5-minute charts to go into an uptrend in order to get that pullback, right? If the hourly needs a little bit of a rally before selling off more, it's going to require a 5-minute chart to go into an uptrend, right? That's part of this, okay? So, all right. Again, I do not expect you to have super clear understanding of that yet. This is a process with it all, but I'm going to now dive into the Thinkorswim charts that I think is going to save us some headache and get us into the nitty gritties. All right. Let me stop share. And we're going to take a quick water break here. Ron or Jay Groove, if you could answer that question in the chat box while I pee, I would greatly appreciate it. And then we're going to dive into our chart examples. Okay. So everybody, 2-minute water break. Ding, ding, ding. All righty, I'm here. I've also seen Joseph's question, and I see Ron and Jay Grooves giving great answers to it. Joseph, that's also a question that is harder to answer over text and easier to answer over questions or excuse me, over charts. So I'll go over an example on that here, but also post in the questions chat box and we'll be able to cover that, right? So, all righty, let me flip back into a screen here. I want to show one more thing on this Google Slides here. I just want to highlight one thing, my friends. I just want to highlight just one quick thing, okay? I want to sear this rule into your brain. Candle analysis is applicable on all time frames, right? Then we talked about this chart, and we talked about how if we had a level here, right, and with a weaker daily chart or an hourly chart that might be showing some, flipping to a downtrend or something kind of random, that we would not take this short at first entry, right? But we would take a short entry on the failed buy setup, right? We just talked about this. This is the Zoom weekly chart. This is the Zoom weekly chart, right? So this is candle analysis on a weekly time frame, right? So let's just go ahead and add the text box right here. Oop. I want to add a text box right here. Candle analysis is applicable on all time frames. No reason. Let's just remember that. All right. All right. Now, actually, you know what I'm going to also do? I need to Command-Shift-4. And then I'm going to drag this into text lessons. So in the text lessons channel of the Discord, I'm going to post this picture, and I want us to be referring back to this picture of the ZM weekly chart. Right? All right. Now let's pause. And let's share a new screen. I'm going to get back to Thinkorswim. All righty, let's go full screen here, right? So let's go back and let's take a look at the ES. And let's drill down to an hourly time frame, right? So what I'm going to do here is clear out everything and just mark out a key level from Friday, right? So let me make sure I got the snap drawings on, all right? Excuse me, from last week that came into play a little bit on Monday. So earlier on in this presentation, I had said, we're going to dive into the charts and I got to find an example and all that. Imagine the first half, not going to lie. Bullshit, I had an example lined the fuck up. I have an example lined up that is going to break down and tie into the exact charts that we just looked at, right? So first things first, let's take a look at this ES chart, right? Coming into Monday, we had two different things from longer time frames. Let's actually first start back. I got ahead of myself with my little excitement of trapping you saying I didn't have an example when in reality I had a fucking fire example, right? Let's do a little bit of trend identification on the weekly chart. So let's clear this out. Right, so on the weekly chart here, right, we have our first lower low, right? You could argue that we have a lower low right there, but potato, potato, right? Potential lower high into lower high. Then we get a rally. We get a failed higher high here because it does a little wick above. Then we get a push down into a new low. We get a potential lower high that goes into a lower high. Then we get a lower low. Then we get a failed higher high. Right? Failed higher high and lower low and lower highs are very similar. This could be constructed taken as a lower high. It just, we got like a couple ticks above, right? And then it failed, right? So it's really more of a failed higher high, same exact as example there, kind of a trap above that failed to go higher and then ultimately goes lower. Then we have a lower low right here. And now we are in a tricky spot on the weekly chart because we're putting in a potential lower high, right? Right? I'm hopeful that that's clear for everybody on the trend. I understand that there might be a few discrepancies here and there where you'd be like, wouldn't this candle be this or wouldn't this be that? But from a broad perspective, we should all understand and be cool with these assignments of trend here, right? Lower highs, lower lows, where they are, right? And establish this is a weekly downtrend. So we've established that. That's cool. Confirmed. Weekly downtrend. Lock it up, lock it in. That's what we are in, right? But this weekly chart has had 1, 2, 3, 4, 5, 6, 7 or 8 bars of moving up. Right? So here we have a rally within a downtrend, aka it's a pullback, right? That's what I meant when I said the term pullback is interchangeable. All that pullback references is trend, right? We have a rally within a downtrend, aka a pullback from this downtrend, right? A rally within the downtrend, a pullback, right? Now the weekly chart, in order for it to get this rally, what needed to happen to the daily chart? It needed to flip into an uptrend, and you can see that it does. We have a higher low established here that has not been taken out. I'm actually going to do this. Now I'm going to flip to right now on the daily, we have higher low or potential higher low that turns into a higher low. Once we break over this lower high right here, right in the market, we have higher high. Again, you can mark it on this day or this day. It's all, I'm just using this as an area, right? Then we get a pullback here, pivot a higher low or a PHL that's into an HL. Then we get a higher high. Get a higher low. And right here, we get a clue. And now, do you remember all when I was looking, if you looked at that one in the text lessons examples I just posted, the Zoom weekly chart that we were just reviewing, when I gave you that head fake, like I didn't have a perfect motherfucking example, where I mentioned and what I said was the first part of us not shorting that level immediately was, or excuse me, the reason we didn't take that buy setup on the weekly Zoom chart or on the Zoom chart, the reason we didn't take that buy was because what if it was giving us a clue? The daily chart was giving us a clue that it might be flipping into a downtrend, or it might be failing, or something might be going wrong, right? Well, guess what? Right here, this failed higher high is a clue that we might be starting to reverse the daily trend, or we might be in for a move down, right? We might be in for a pullback. Doesn't necessarily mean we're going to break this uptrend and flip into a downtrend, but it's that first clue, right? It's a clue. It's a sign. It's a sign that maybe we don't go long that day looking on SPY, looking for a move to move back up and take out a level. Right? We wanted to see the first part of the note that we had on that requirement on why we didn't take that ZM buy setup from the text lessons chart. Why didn't we take that? Because the daily chart was showing us some signs that, you know, we might be failing to go higher, or we might have a daily flip. Boom. This failed higher high here is that sign. Right? Now, the second thing I mentioned is I was like, you know, and then maybe the hourly chart was starting to flip into a downtrend. So we wouldn't necessarily want to go long on SPY if the hourly chart was flipping into a downtrend, right? So let's flip to the hourly. Well, from the hourly, coming into Monday, which is right here, we're gapping down in the market, but we notice that we have a level right here, right? We got a level right in that general area. 4017 is the specific level, right? So we're thinking All right, and this was the short that I missed, mainly because I was in McDonald's, which actually held up well for the beginning part of the day. So my bias was in the wrong place. So I missed this short. But here we have an hourly chart that's starting to flip into a downtrend, right? We're breaking underneath a previous higher low. We have a failed higher high, and we're breaking underneath a previous higher low. That would be a sign that we are flipping into a downtrend, right? But we have a level there. And the hourly chart could use a retest of that level, right? We know markets move from level to level, so a retest of that level would be totally in play. And if that gets a retest of the level, that even though it retests it, we're still in an hourly downtrend. We still broke beneath support. We're still not holding, right? This is simply a pullback within a downtrend. So the hourly chart here has pulled back from its downtrend and given a rally up into resistance, right? It's given us a rally within a downtrend. We're in a downtrend because we broke beneath that previous support, right? But this is an hourly chart. How many candles are in an hourly chart? How many 5-minute candles are in one hourly bar? 12. 12. So for this hourly chart to get that pullback, what had to happen to the 5-minute chart? It had to go into an uptrend. Right? We knew that the hourly was getting a little bit of a pullback. In this chart, in a vacuum, the 5-minute chart here, at one point early that morning, was in an uptrend, right? Because it had this was what we assumed the base was. This was our low. We had a rally up. We tagged the level. Then we came back and established a potential higher low, right? Now, I'm not 100% sure, but I think earlier tonight, we talked about an example about how if the daily chart was giving us a failure clue and the hourly chart was looking like it's in a downtrend, we would have skipped that buy setup that we had on the Zoom chart from the PowerPoint, right? We would collectively agreed to skip that buy setup. Well, in this particular example, we have a daily chart giving us that failure to go lower indicating clue. We have a weekly chart where it could be potentially putting in a sell setup and a lower high, right? So are we interested, excuse me, and we have an hourly chart that's just broken into a fresh downtrend. So are we interested in taking the buy setup here after rejecting the level? No. Right? No, we're not interested in taking that buy setup. And that's the reason I didn't take it and I didn't signal it and I didn't trade it. It wasn't on my radar. Now, I missed this short. Again, I missed this short because this is what I'll attribute it to, is because this is why I don't like swinging over the weekend, but I did it anyways. It's because I always like to come into Monday fresh, and I didn't come into Monday fresh. So my bias was that because McDonald's had relative strength and was gapping up while all of this happened, I was thinking maybe McDonald's could hold, right? And I was scalping some individual long names in this early move up, partly because I had that swing bias in, right? When in reality, I knew to skip this buy setup here. I knew to skip this one and skip the follow-up one. I knew to skip those because of everything we just mentioned, right? Daily chart failure to go higher, hourly chart flipping into an uptrend, weekly chart telling us potential lower high, right? And unfortunately, I actually cost myself an A plus. I wouldn't call this A plus plus, but it's pretty damn close, in a quality level short setup, right? Because all of those time frames were agreeing. The weekly had the potential lower high, the daily had the failure to go higher, the hourly had the fresh flip into a downtrend. So all three of those time frames said we might be moving down today, right? but we still need an entry on smaller time frames, right? So much like that Zoom chart example from in the PowerPoint, we don't take the first level test failure here necessarily. You could have, and it could have worked, but we don't take that because we're still in an uptrend on the 5-minute. We don't want to be counter trend. On the 2-minute, we were definitely still in an uptrend, right? We were holding a higher low here, right? We had a strong power move up, right? But as soon as we trigger this 5-minute buy here that fails, right? Here we flip into a downtrend. And from there, it's sell setups all day. Sell setup right there that works. Then there's some chop, some consolidation. You would have gotten entered here, right? And this with this Fed news candle or something, you would have got stopped out. This was really just choppy and tricky action. But even after we get a new lower low, does kind of fail to go lower, but it's still a new lower low. And here we get triggers for sell setups, right? Again, the 5-minute, one of the things I mentioned earlier on in the day, was that post 8:30 a.m., which was right here, it's easier to flip to a 15-minute for buy and sell setups. So right here, if you had taken a 5-minute sell, technically you would have gotten stopped out. And I probably would have held, because actually I would have held because you never got closes above your stop loss, but you very easily could have trapped yourself out right there on the 5-minute chart. On the 15-minute chart, right, there's no such trap. We get the new low, we get a nice inverted hammer here, and you can take the 15-minute sell right there. And from there, we have a clean downtrend into the rest of the day, right? Another sell setup right there. Again, this sell setup would have been at low of day, shorting right into the low of day on the 15-minute. I don't love that. I don't love shorting right into the low of the day because we know low of days can fail. So whenever I do take a short entry or a long entry that's closer to low of day or high of day, I tend to be in what we call hit and run mode, right? I treat it much more like a scalp. I'd be less, you know, looking to aim for the big move. If I miss the big move, so be it, right? I'm in hit and run mode because you're shorting near the low of the day, or long near the high of the day. You don't have the best risk to reward entry, so you have to be more disciplined in how you manage it. An example of that today would be this 1, 2, 3 pattern that came in the market that I know a variety of students took this, right? Break beneath the open, break beneath the level, 1, 2, 3 pattern, great one like what we talked about, right? If you take this 1, 2, 3 pattern in the low of day, I'm out most of my position on the breakdown and follow through within that pattern. Why? Because my entry is not all that good, right? My entry is not amazing. I'm shorting after something's already had a big breakdown, right? I'm not going to assume we're going to break down lower and break beneath levels. I'm going to assume that levels are going to hold, and I'm going to be a hit and run mode, scalp, right? So that was just a little side note on that. But, right, you can see on this day, it was, and this is why I'm kind of upset at myself a little bit, just because Monday was a really good short setup. And if I hadn't swung overnight on Friday, I think I would have caught this one and it would have been a big move, because this is what we look for. This is when I talk about the phrase time frame confluence, this is what it means at its best, right? At its best. Weekly chart. Weekly chart, putting in a potential lower high and a potential sell setup, right? Clear downtrend on the weekly chart. Daily chart had flipped into an uptrend during that time, but daily chart was giving us that clue that it was failing to go higher and that this buy was failing over these highs. So the daily chart was aligned with this bearish sentiment that we could potentially have a move down after failing to go higher. The daily chart was aligned with us. Weekly chart aligned. Daily chart aligned. Hourly chart aligned, right? Why? It was a fresh gap underneath previous support. That's a bad zoom. It was a fresh gap underneath previous support that had put us into a new hourly downtrend, meaning the hourly was also in a downtrend with us, right? Now, with those timeframes aligning with the trade, now it's a matter of finding an entry. And we broke down exactly why, in my opinion, the best entry on this day would have been the failed buy setup. Excuse me, I got lost right there. Would have been the failed buy setup right here, rather than, you could have taken the rejection, just would have been more aggressive. The more confirmed entry is the failed buy setup right there. Right now, let's look back at our hourly chart briefly and say, okay, here's our first level. Oh shit. Well, where would my target be on this trade? Well, let's see. We got no levels here. We got no levels here. We got no levels here. Okay, boom. I got a level there. A level there. I got a level here. Okay. All right. And oh, excuse me. Wow, I just missed the. Boop, 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 boop. That's the one I wanted to draw anyways. Remove this middle one for now. Got a level right here, 39.62. You take this short setup here, this failed buy right up here at 4,008, right? That would leave you with a stop loss. Your stop here would be, what's it? If you entered on the break of this bar's low, even if, let's say you entered on this break right here, so at 4,004 with a stop above 4,012. Eight points risk, right? And your target is 39.62, right? So if you're in at 404, targeting 39.62, that's a 42-point target, risking 8 points to target 42 points. Now that sounds nice and amazing on trading futures or shares or whatever. But in this particular example, if you were trading zero data expiration options, you would probably be risking about a 30 or 40% stop loss for 500 to 600% on the options. And I'd be willing to bet if you looked at how the SPX options moved that day, the move down went from one level to the next, one level to the next, and that would have been a massive trade, right? And I'm bummed I missed it, but Jake, how would I have known to hold for this move? What would have made me want to hold for this move? And if you got stopped out during this crazy wicks or anything like that, that's just, you can't be mad about that, right? But Jake, how would I have thought to hold for this move? Well, let's talk about the time frames that we just clarified and how much they were in alignment with this trade. The weekly chart in alignment, the daily chart in alignment, the hourly chart in alignment, the 5-minute chart in alignment, all of these things lining up together. That's not a mediocre setup. That's a great setup. And we know that markets move from level to level. So if you have a great setup with all time frames aligning, it shouldn't be surprising when something moves from level to level, because all the time frames dictated that was a possible move that was on the table, right? So you legitimately could have held. Now, I personally am somebody who likes to trim my positions a little bit more frequently, especially because I trade a larger number of contracts, but you could have legitimately taken a small trim beneath the open, just in case the open held, maybe a small trim on this fresh low down here, just due to the aggressiveness of it. But no need to trim on this bear flag or this consolidation period, right? But after that, there is no reason to close this position until the level tag, or maybe right here. Because at this point, risk reward probably would have shifted because your stop loss would be above here. and your target's right there. But there's no reason to close that position until then, right? We have bear flag, we have lower high, right? And you can legitimately hold. This is what I mean when I say I like big moves, because I want to catch the full juice. I'm not super interested in buying puts here and selling them here. That to me is more of a scratch trade based on the way that I trade. I want the big moves, and our system allows us to do that. Okay, so that, my friends, is one example of multi-time frame analysis. And I got to be honest with you, I'm curious what Ron G thinks, because he's seen the last 4 of these and been on live with them. But I thought that was a really good breakdown of multi-time frame analysis, because the time frames connected well with each other. If it didn't click as much as you hoped it to, the last one we did in Mastermind 4 is going to have a snow trade that I actually took, that we took and made like 200 or 300% on. And we break down, and that one was also excellent breakdown of multi-time frame analysis. So I'm excited. I think that these should clarify any confusions that might have come up. That being said, we're not done yet, even though my stomach is about to die on me out of hunger. All right, let me pause this here. And then let me reload this and we pop that up. Like I mentioned, everybody, this one is, of all the ones, this is the most conceptual. Multi-time frame is the most conceptual of them. So I don't expect you to have this fully locked in by now. That's the reason I'm going to send you all every single multi-time frame lesson I've ever done, because you should see them all, right? You should see many different examples of this. And this is the one that it's going to take like a minute or two before it clicks, right? So the last thing that I want to cover tonight, right, is, again, we've talked about this a little bit, but we'll just review it really quickly. The bigger picture is that the primary focus needs to be on the longer time frames. On the longer time frames, we focus on overarching trends and identifying potential larger moves. On the smaller time frames, we look for entries, exits, and management, right? But we also pay attention to how the smaller time frames are impacting the larger time frames, right? Now, when in doubt, zoom out. The best time to use patterns is for entries, but there are also times that these patterns will present themselves on longer time frames and give fantastic large moves, right? Now, for me, for ideal buy and sell setup entries, on the early morning session, I like 2 and 5 minute buy and sells. But whenever I'm taking a 2 minute, it's imperative that the 5 minute is lined up with that 2 minute. In Mastermind 3 multi-time frame analysis is the best explanation of a 2 within a 5. So you're going to get a great explanation of that in there. It's going to really break down and hone in on that particular point. So it's important to me that you watch all these, right? It's for a lesson. This is just such a deep topic, right? Then for the afternoon, I like the 15-minute while also watching the 5 and 2. And for swing trades, I'd like to be watching for weekly, daily, and hourly buy and sell setups, right? Now, here is the moment, my friends. Of all these 3 lessons, I've found it imperative that we establish some rules for each other, right? We establish some guidelines. Don't worry, I'm going to put those rules right back up, right? But we establish some guidelines and some structure that we have before we enter a trade. All right, so let me remove this, this, right? We have 4 rules that we look for when entering a trade, right? The first is we want to be using a level or the opening print as our reference point, right? On all of our trades, we would like, or vast majority of our trades, we would like to have some sort of reference point being either a level or the opening print. Let's take a look at this trade we took here, or we wish we took on the failed buy setup, right? Right? We have the 4017 level as a reference point, and we have the opening print right here as a reference point. So rule number 1 on our rules, do we have a level as a reference point? Check. 4017 rejection. That's a reference point. That's a level. Opening print right there. That's a reference point. That's a level, right? So that's rule number one. Rule number two. We like the majority of our trends to be trades to be with trend, right? So that's why we didn't take this first entry right here. That's why we waited for the failed buy setup, right? That's why we were on all of our trades. We don't want to be counter trend. In shorting right here could have potentially been counter trend, and you could have gotten your face ripped off. Not to say that it would have been a terrible entry. It just would have been an aggressive entry. And that's why the word majority is there, right? I am okay with counter trend, smaller size stabs at something like this, but the bigger position size would have taken place on this failed buy setup here, right? Now, our third rule that we have is that when trading trend flips, we wait for a setup to trigger, right? And here in this short example here, we waited for the failed buy setup to trigger us an entry. You also could have waited for the flip to confirm into a downtrend and taken the sell setup that triggered right there, right? Either one of those would have been a valid setup triggering us to enter. And I'm going to put in parentheses there, buy/sell, comma, or failure. Right? Now, I'm sure, and I'm actually gonna point out, and I really hope you don't take this in a negative way, but KC did something fantastic, which I, again, which I encourage everybody to do. I can't hand review everybody's trades; it's just too much. But when there's free time in the Discord, I will definitely review individual trades that you'll take. And KC posted 3 trades today that he took. In all 3 of the trades that he posted, one with 2, it was like 2, I think 2 winners, 1 loser. All of them followed these 3 rules. He had a level as the open as a reference point. He was with trend, and he waited for a buy or sell setup to trigger, right? However, the key component that he was missing was rule number 4, and quite possibly the most important of these rules. Above all else, we want time frame confluence, meaning we want the larger time frames to agree with us, right? We want the larger time frames to be telling us the same story. Again, I really hope you don't take this in a negative way. This is all just for learning, right? But the trade that he took was a long on Amazon today, right? He took a long on Amazon. If we mark out Amazon's levels, coming into today, Amazon had a level right here, right? Had a level there. So then we drill into our smaller time frames with our first 3 rules, right? We had a level, and he took a buy setup or off a kind of failure to go lower that was breaking back above the level. Now, the one thing you could argue is this with trend? You could say not necessarily, but I would say yeah, because that could acting as a potential higher low. We put in a higher high there, right? This is with trend on that 5-minute time frame. He waited for rule 1, right? Rule 1, level or OP as reference point. All good, right? Trading with trend. All good. And then wait for setup to trigger. All good. Right? Our first 3 rules, he followed them. And that those 3 things lined up. Right? Like I mentioned, if you wait, and that's why I gave the pre-warning after the lesson 3, was that if you take every buy and sell setup you see, you're going to get clapped, right? So it's important to use the levels as a reference point there. But even that isn't enough, right? Our 4th and by far most important rule is above all else, we want time frame confluence, right? We go to a weekly chart, Amazon's in a downtrend. And if you review the Sunday webinar, I pointed out the structure and why which Amazon was actually on short watch rather than long watch, right? Because it had the knock knock Uno reverse, right? It had it has the Uno reverse right here. It's in a clear weekly downtrend, right? It's one of the weaker names on the board. Then you flip to the daily chart. In the previous day, we have a nice failure to go higher that puts in a hammer, an inverted hammer that's a relatively bearish daily candle, right? So he had 3 steps lined up of our rule system, good to go, right? GTG, baby, good to go. However, the key missing component was that time frame confluence, right? Understanding how the larger time frames were dictating that picture. And what this really was a 5-minute rally for the hourly to put in a lower high. The hourly put in a lower high, and we got the continuation down, and we got the move down, right? So if you had been keeping rule number 5 or 4 as a really key, as your number 1 priority, right, then you actually may have looked to take this short trade as a short in the other direction, given what the other time frames were telling us, right? Given that it was looking like a failure of the level and that it could lead to a larger move down, right? So it's super important. It is paramount that we understand that prior to entering a trade, you need to have an understanding of all 4 of these factors. Is there a level or an opening print as my reference point? Is there a clear trend that I'm trading with? Is there a trigger that triggers me into the trade via buy or sell or a failure pattern? And 4, above all else, are the time frames aligned with each other, right? This is why I say that even scalpers need to be aware of the larger time frames, because scalpers could justify 100 different longs on Amazon today. There's 100 different opportunities where you could have looked to scalp along, but none of them were even worth your energy, even for a scalp, if you were in tune with what the daily chart was presenting as a potential outcome for that day, right? So it's again, sorry for putting you on blast, KC, but I will say you did an incredible job of following the first 3 rules, and you hadn't learned rule 4 yet. So no, that's why I said, I was like, I'm not surprised that this is something that happened to you, is because you were missing this 4th piece, this final piece to the puzzle, right? So, whoo, all right. Bing, bang, boom, everybody. Lesson 5 and our big 3 stretch of lessons, 3 through 5, which were highly technical based, are now complete. By no means are we done exploring the technical aspect of our strategy. I'm sure there are a million other things that you are curious about that we will for sure cover. However, the core of what you need to know about my strategy is in place for you. Everything you need to know is in place. It's now simply taking it and applying it. So I really hope that over in the beginning, in the first 2 lessons, when I said, everybody, wait for 3 through 5, because I have this shit down to like a fucking science, and you are going to be, no one's ever been upset about how the strategy has been taught, ever. And I think that I have it down to a science, right? I really hope that these last few lessons have absolutely changed the way that you view charts in a completely different manner, right? So I really hope that these last few lessons have literally changed the way you view charts, right? And it's not just going to be something that is same as stuff as what you've learned, previously, right? So that being said, like I said, this lesson is conceptual. So we're going to get, as soon as I'm done and I hang the phone up on you, I'm going to, before I do anything else, before I even pee, right, I'm going to send you all the 3 previous multi-time frame analysis lessons. Going to repeat this because not many people were on in the beginning when I said this. It's Christmas Day. I'm going to send you 3 pieces of 3 former multi-time frame analysis lessons. I'm also going to send you a live trade review where I filmed myself during a meta short trade and what my thought process was on it. And I'm going to send that out as well. And then the fifth and most valuable one, which I might watch first, just because it's my favorite ever, is the bonus lesson, which is the bar by bar breakdown of a 5-minute chart. Right. So 5 videos can be posted after this. Then I'm going to post this one as well. So there is a shit ton of educational content coming your way. And I want you to study it all as much as possible, right? So a few questions popped up that I will answer before we hop off, and I'm not going to do questions right now because I'm so tired, so try not to feed too many more. One thing, no, I don't use level 2. I don't use level 2 or volume. We'll talk about that a little bit more, but I don't. All levels come from the hourly time frame only. All time, that's the one I do. And the last one was, how many time frames do you need before taking a trade? It depends, but you would always want to make sure that at least your daily and weekly, it's no exact answer to that, but you always want to make sure your longer time frames are supreme to everything else, right? So that being said, my friends, I need to get you all over here, and I need to get, if you wouldn't mind, just for me, one more time, my friends. Oh, LFG, some hype in the chat. I've seen some other people do it. Oh my goodness. I mean, come on. Like, if you're talking about excitement after a mastermind lesson is complete, holy shit. I love you all so much. Lesson 5 is in the books, baby. In the books. Oh, she thick. Oh my goodness. I love you all. Thank you so much for doing that. Next, lesson 6 is going to be everything options. Lesson 6 and 7, we're going to be talking options and futures. For some of you who have been more intermediary traders, some of it might be review. I still encourage you to take it and go and dive in with it. I feel it's my fiduciary obligation to give an in-depth presentation on options, because those are the instruments we trade every day. And I need everyone to have a super clear understanding of how they work. That being said, I give it to you in the most non-fluff. There's no fluff. We're going to go right into the important stuff about it. So I know that these last few lessons have been very thick. I'm going to give you some time to digest them from a technical standpoint. Our next 2 lessons are going to be more on options and futures, the instruments we trade. And then lesson 8, we're going to circle it back up and tie everything the fuck together. So I love you all so much. I really hope more than anything that these last 3 lessons have been everything that I hyped them up to be, because it's just crazy the way that you look at charts once you learn this stuff. So hope everybody has a great rest of the night. I do hope you feel better. I love you all so much, and we'll talk very, very soon. All right, let me go post those videos for you right now. Cheers, gang.